Everybody, this is John. Welcome to the free video. So for today, we had earnings, and one of them was IBM. Closed at 156.95, trading after hours down 153. Let me check and see what the expected move was. All right, so the expected move was $6, and it's actually $6.85, and the move right now is $2.75. That's actually really bullish. When you stay within the expected move, especially by that much, very possible that it rallies to positive in the morning, and if not, that's fine. Netflix had an expected move of $40. Here you can see it closed at $348, and it's at $404. So, nice bullishness there, and we should see a little bump in the morning, okay? So now the question is, what about the Qs? So we're going back to this chart. This is driving everything here. And we have a daily downtrend in the midst of a weekly uptrend, okay? And what I'm looking for is that we could get a nice move up to, the top of the range here, which is about 104, 105. That is not a breakout. So we could get a pretty healthy rally up to the top of this trend line, and I think that's what we're going to get. Okay, we're seeing a lot of high put call ratios here, seeing a lot of bearishness, and it's time to rip the head off. The market is an equal opportunity dream killer. If too many people are bearish, it's going to rip their heads off. If too many people are bullish, same thing. So when I got that kind of put call signal today, in the trading room, I initiated 3 or 4 trades, and we also texted them out. So one of them was Facebook, just looking for a simple target of like 76.75. Got some nice entries for stuff that expires this week. Entered these about 11:30 this morning. Did a debit call spread as well as a put credit spread. On Priceline, we got a timing signal and sold the 1,995 put call spread this morning. At this point, got some nice profit in it, and probably looking at taking this off at 80% of profit tomorrow. The other one that we got set up, and then we set this one out at about 11:45, was Buffalo Wild Wings. This one's a little bit different. Sold a little bit more call spreads. Also bought a call debit spread, and then got an out of the money kind of an insurance call in the case that it just rallies right into earnings, which also line up with the Super Bowl. Okay. So those are the ones, is that the ones we did today? Yeah, so those are the ones that we had set up today. And then after hours with Netflix earnings, we bought NASDAQ futures. And what I found is that when you see a stock like that and it goes greater than, a big stock that goes greater than 1 standard deviation, the NASDAQ futures don't react right away. The only one that they react later, like overnight and in the morning, so you can get an immediate profit. So we did that right after Netflix earnings came out. And then I expect at this point that the NASDAQ futures will gap open, and we'd be looking to take profits about 41.80. So all those were also sent out today based on those signals. All right, and so one of the things and one of the strategies that you're going to see me also doing more is a strategy called double diagonals, which sounds super complicated, and honestly, no beginning traders ever try because they don't even understand how to do them or how to manage them. And most intermediate traders kind of like, what? That just sounds kind of confusing. They're actually super powerful. Anytime I do them, people freak out like, oh my God, I don't understand. Well, the best person to teach this is Bruce, and he's going to teach, it's a beginner's guide to double diagonals. This is going to be Wednesday from 8 to 10 East Coast time. I may have said 7 to 9 last night. So it's 8 to 10 East Coast, which means it's 7 to 9 Central. But also keep in mind that if you can't make this class, it'll be recorded and you'll have access to it within 24 hours. Okay? The ins and outs of what a double diagonal is, so you know how to use it and why it works. Why you may want to incorporate this hybrid trade. And it's kind of like double calendar meets iron condor is one way to kind of look at it, except that with iron condors, once you're in the trade, you're kind of done. The only thing you're going to do is make adjustments to save what you have, whereas with the double diagonal, you can actually expand and contract both your risk and reward at will based on certain circumstances, which Bruce will talk about. Step-by-step guidelines of how to put on the trade, and then also taking off the trade so you know exactly when to do both. The common mistakes to avoid so you don't waste money on commissions. Okay, very common. The tricks of the trade, so you can put on trades and manage the trades more efficiently and become a consistent trader. And then one of the things Bruce is really good at, because, I mean, he used to do this at a hedge fund for 20 years, is he is great about offering plenty of real-world examples, and he'll look at trades that he's been doing and is considering doing, okay? And again, this will be recorded. So if you're seeing this email, you can still sign up for $97 instead of the list price, which will go up at $297. And like I said, if you're kind of on that options journey, this is one of those steps in one of those classes that can take you to the next level. And the more you can learn about things like this, like it's one of those things like learning about double diagonals also makes you a better iron condor trader, okay? Because you understand more about how the options work. Anyway, looking forward to it. You guys have a fantastic night, and I'll see you here at the webinar on Wednesday.